Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, November 12, 2014. Tonight you're looking at a chart of the SPX Cash Index, the S&P 500 Cash Index. Today was a doji day. It was supposed to be a down day, and early in the morning, well actually in the overnight session, on the Globex, on the S&P futures, and early in the morning we did head down. Let me just bring up. I just wanted to show you this doji, and the reason I brought this up instead of the normal SPY is because the SPY isn't showing the same thing. It's just treated a little differently, and the market opened up lower and went back up. And this is showing a full green candle as opposed to the doji on the S&P. So I wanted to show you the doji because that does signal a market turn normally, although these were dojis too and it didn't turn. But nevertheless, now we know, since I've told you, today was the day that we're in the window for the turn. I was expecting bigger down day today, but we didn't get it. And there's light volume, and it's basically very difficult to see any kind of a down move in a light volume market. You have to see volume. You have to see selling pressure come in, and we really didn't see it. We just saw it first thing in the morning for less than an hour. The market caught a bid, and it floated up for the rest of the day, or really sideways. And but that doesn't mean the market won't go down. It just means it didn't go down today. So I do expect a decline to have begun today. And really, today doesn't count, even though the S&P was down almost 1.5 points. That's nothing. That's flat. But I really believe that if we do get the decline, I'm anticipating that it will last through or up until the Thanksgiving Day holiday, which is in little over a week. So there could be some downside. Like I've been saying, I expect us to get at least down to this 50-period moving average, all this support down here, about 197, 197 and a half in the SPY. But we really didn't get it today, and that's okay. We'll see what happens tomorrow. Here's a 10-minute chart of the intraday, and you can see we opened up down. Okay, we gapped down, and then the market immediately floated higher, and then I thought we were going to get the sell-off when we came back down, but it just wasn't going to happen. We couldn't take out this low. Market floated up, went sideways all day, and this is actually a bullish pattern. If you look at the 60-minute chart, the hourly chart, you have an up candle here, and then you have a sideways consolidation pattern. We can certainly pop higher tomorrow. In order for there to be a bona fide down day, a market turn, a market turn and a down day, I would like to see a gap up in the morning and a reversal down, and that would basically put downward pressure on the market. We didn't see that today. We saw the gap down, and then you see what happens. The buyers come in, the buy the dip mentality hits, and we floated up, and that was it. So we're still looking for the downward pressure. We're still in a turn window. We're still in a period of time where the market should sell off. Well, should is one thing, and if it actually does is something else. But we're watching it. I can't make the market do what we want. We have to let the market tell us what to do. And right now it's telling us be patient. There's really nothing going on. We're not going to be heavy one way or the other. We're certainly, let me go back to the daily chart, and I want to show you something. We're certainly not going to buy after this rally has occurred. I'm just going to draw on a line because I want to accentuate something. Okay, look at this angle up that we went. Okay, this is, let me just make it a different color so you could see it better. Okay, this is I don't even know what degrees this is, but it's certainly a line that's too steep to sustain itself. Okay, markets, in fact, I went back before and I tried to find an incline that looked like that, and you really can't. And it's interesting. I mean, this isn't even close. This isn't even close. There's just nothing that looks like that incline that we just had. Even this is a huge rally, but it's nowhere near the incline that we just saw. Okay, you can see a decline like that, but not an incline. And it's not sustainable. I mean, you can't find. I went back. I think I went back over a year, and I couldn't find it. And I think you can go back as far as you want, and you can't find it. So when you see something like that, look at this. There's nothing like it. It's just amazing. So when you see a market that has a steep incline like that, what it's telling you is it's unsustainable, and it's telling you the market has to pull back. The market has to pull back. That's the bottom line. We're not seeing it. We should see it, but that doesn't mean we can't see higher prices. So that's really all I'm going to cover in the S&P. I don't have anything else in the S&P other than one more number, which is on the ES contract. Like I've been telling you, I do have 2050 to 2052 on the radar screen. And today we got, or yesterday, we got to almost 2040. We got to 2039, and then we backed off of it. So that's close, but it hasn't fulfilled that number. And I think that's the only thing that's holding the market up, is a force that wants to take us to that number. And we'll have to just see what happens if we get this pullback or not. But right now, we're letting the market tell us what to do. We're not going to impose our will on the market. We're not going to short the market with these kind of these days that just float higher. We have to see a turn. So, for example, let me go back to the S&P Cash Index. Okay, normally, under normal circumstances, this would signify a turn in the market, this doji day. But as you saw, we saw one here, we saw one here, and it didn't happen. So, we're going to be careful. We're going to let the market tell us what to do. We have to see a sign of a high volume reversal day to tell us that the selling pressure is on, and we just haven't seen it. All right, let's move over. Just be patient. Let's move over to gold. Okay. Gold put in basically a little bit of a down day, but not much. The price of gold futures was down a couple of dollars. GLD, this is GLD, was down 54 cents. And, there's nothing going on. I think there's still, here, let me go over to the weekly or monthly even and show you where I'm at. I think that basically, remember I was telling you that the downside to gold is 107, or GLD, 107 to 108 to 109, 110. Well, we got down, basically we pierced 110 and reversed up a little bit, but I still think there could be lower prices ahead. Just one more time, 107, 108, 109, something in that neighborhood. Something in this neighborhood, not that one. Something in this neighborhood here. See all this consolidation here? I still think the price of GLD and the price of gold could come down, and gold should pierce or come to 1100, and that I would feel better about that low than the low we had. But again, we'll see what happens. Some of the gold mining stocks have been on the move, and they'll usually move first before the price of gold, and they are. Let's take a look at GDX. We haven't looked at GDX in a while. And the see GDX on a daily basis has moved off the lows, and I'm not convinced that we've seen the low. Certainly until we get above this red bar high here, which is 1945 on a closing basis. Until that happens, which is above this 20 period moving average, then I'm not convinced the low is in GDX or GLD for that matter, and we'll just have to wait and be patient and see what happens. We have had some high volume days, but we just haven't had the one I'm looking for. We haven't had the type of reversal that I'm looking for. And, like I always say, folks, the market is designed to trick us. The market is designed to suck us in. When we think something's going to happen, then it does the opposite and something else happens. So that's where we are now. And I'm not ready to issue a buy alert on gold, but we're getting close. We should be within days, a week or two away, and that's the way I feel about that. So we'll wait. We'll be patient. Let's go over to oil. Oil is struggling more than gold was. Oil, right now, the price of crude oil futures is, looking at another chart here, bear with me, $77.02. It was down below 77 earlier. I still think we do 75, maybe 74 one more time, and I would feel better about that low. Whether we get these lows or not remains to be seen, but I know what I'm looking for. I'm looking for a number, and I'm looking for a high volume reversal day, and we just haven't seen it in oil. We haven't seen it in gold. We certainly haven't seen it in the S&P or any other stock market index for that matter. So the market's grinding higher, gold is grinding along, oil is kind of melting away. It really hasn't been able to stage a rally. It certainly hasn't been able to get above 80. So until we see these things develop, I'm just not comfortable issuing an alert for these markets because I think the market is going to do what it's going to do, and I'm going to wait for the market to tell us what it wants to do. Folks, I wish I had more for you tonight. I wish I could give you something definitive. I wish I had, something that you can trade off of in the market. I just don't. And sometimes no trade is the right trade. And right now, no trade is the right trade. Be patient. It'll come. The market will tell us what to do. We'll do it, and that'll allow us to make some money. So that being said, I'm going to leave it there tonight. I wish I had more. I apologize, but the market gives us what the market gives us, and we'll take it one day at a time. We'll be back tomorrow, hopefully with some better information that's more definitive in the markets. I'm David Frost, MyStrategicForecast.com. This was another episode of Common Sense Technical or Market Analysis. Thanks for tuning in, folks.